Good morning, everyone. Thanks for joining. I think it's going to be a great panel. So the history of this, a brief history of the working group is MOBI sets up working groups for vertical use cases, and we set up the finance working group about a year ago, and initially began looking at blockchain securitization for retail loans. And after a little while of working on that, did a pivot to a dealer floor plan. And the reason was there are just much less moving pieces with the dealer floor plan. It's a more concentrated set of actors. And so was kind of an easier one to attempt as a first project. The process that these working groups go through is they come up with standards, they explore the use case, and then if it looks viable, they move it to a multi-party pilot. We call that the group of pilots that we're doing Project Drives, and there's a number of ongoing pilots in that currently. The dealer floor plan audit is moving into the Drives program so that we can do a multi-party pilot. And this presentation this morning is about where we are and that multi-party pilot that's beginning. I'll just say one other thing, which is the floor plan is really foundational, interesting, because it's the first one, at least in finance, that combines vehicle location with identity under a zero knowledge proof. And that turns out to be extremely important. If you can do that, it opens up a whole bunch of pay-as-you-go use cases. And we're going to talk about really exciting pay-as-you-go use cases that are probably worth collectively multiple trillions of dollars. And hopefully we'll get into that before the end of the call. So with that as an introduction, let's start at the beginning. And I'll Brian, you've been in the industry for a while, so I'll throw this one your way. What's the existing retail finance process for dealers like? How does the dealer floor plan fit into the sales process? Why does it matter? And any other background you choose to share.
Yeah, good morning, everybody. Can you also make sure everyone can hear me okay? Okay, great. Yeah, for the benefit of the non-lenders on the phone, I'm going to do a quick walkthrough of floor plan and inventory audit basics. The typical franchise agreement between a dealer and OEM requires the dealer to maintain a floor plan line of credit through an approved lender. That just ensures continuous invoicing to the OEM when they ship vehicles to dealers. In the automotive space, lenders include captive auto finance companies and banks. The captives are typically owned by OEMs. So the floor plan process looks something like this. OEM ships vehicle to a dealer. OEM invoices lender. That's all automated. A vehicle appears on the dealer's floor plan line of credit with the lender. Dealer pays interest on that vehicle until they sell it. Eventually, a customer purchases that vehicle through a cash, finance, or lease transaction, and then the dealer is required to pay off the vehicle within the lender's payment terms, which typically range for about 2 to 5 days. So to ensure vehicles are being paid off within the lender's payment terms and to protect the lender's collateral, lenders conduct physical inventory audits. The frequency of the audit ranges from monthly to a few times a year, and that all depends on the lender's policies and the dealer's audit history and risk rating with that lender. And the goal of the audit is to determine payment history, just to ensure that dealers are paying vehicles off when they're supposed to, and whether a dealer might be out of trust. And out of trust is a term we lenders refer to when a dealer has sold a vehicle and used the proceeds for something other than paying the vehicle off. And that's obviously what we're trying to head off through the audit process. So we've seen some automation over the years, but the fact that we are still sending auditors to dealers hasn't changed in many, many years. And I know I can vouch for at least 40 of them. So I think we've been doing inventory audits for 50, 60 years. And I do plan to review some of the automation a bit later in the discussion, but that's just a kind of a basic structure for floor plan and inventory audits.
Great, thank you. Mario, you're on the commercial side, so a little bit different than retail. Can you give us an introduction to sort of what the commercial process looks like, how it might be different?
Sure. Again, I hope everyone can hear me. So it's similar to what Brian was describing about the dealer floor plan process. In TICF, we finance material handling equipment and commercial trucks. In especially in the forklift business, has a very specific life cycle in comparison to the commercial truck, which behaves more like the auto side that Brian was describing. So from the OEM perspective, our forklift manufacturers, material handling, Twitter material handling, they ship the trucks to the dealership, and that's when we begin our dealer floor plan process by getting all that information within our system, and that's where the units get automatically funded. But the main difference on the forklift side is the majority of forklift units are factory orders, meaning our buyers need a specific forklift types, either they are electric, internal combustion engine, heavy duty, medium duty, light duty, and also dealers may need all units as well for their own stocks and sometimes for their own rental fleets. Some of the, most of these units are part of the dealer floor plan program. And we also noticed that there's another big part of this process in the floor plan is the inspection of the trucks of the forklift units, because they require special inspections, and there's some conditioning that needs to happen at the dealership before the unit gets delivered to the end customer. We also had a lot of regular forklift documentation paperwork that needs to be completed. There's a little bit different from the retail side, and these are units can come to the dealership and may take between 30 to 45 days before getting shipped out to the end customer, because they all may have their own procurement process in place, and there's sometimes paperwork involved. The other kind of main difference is that because of the forklift, most of the time need special attachments, special features. They need to get conditioned and inspected before delivery. And that also is taken into account where we're doing the audit, because we have to make sure that the unit is on the lot and has a delivery date, and then we have to record those conditions as well. Another big consideration for material handling is that 60 to 70% of the units at the dealer floor plan has already a buyer or a future customer, while the 40% may be dealer-owned inventory. And that also as well, it kind of has a different spin, because our units in the floor plan sometimes could be retained at the dealer location before the end customer solicit the delivery of the unit, because most of the time they're replacement for previous forklifts that are sitting in their warehouse or they're in their factories. And again, physical inspection, paperwork, delivery, that also counts into the floor plan process, the dealer floor plan audit in the process itself. But when we dig a little bit further into the audit process itself, that's when we find sometimes a bit of other nuances that we don't find on the truck side, which is more like the auto side again, is that auditors for equipment are specific, and they need a certain level of experience. They need experienced personnel. In coordinating the floor plan audit, sometimes could be cumbersome, especially if the dealer has multiple locations. Also, timing of when the audit needs to be performed at the dealership. They're not like a car dealership. They may have a lot of trucks in the lot that sometimes need maintenance and need repairs or need some conditioning, and not necessarily all the units are part of the floor plan. And we have to make sure that the auditor takes into account the status of the truck, when they're going to be delivered again, and so forth. The other kind of like challenge we have is usually paperwork, and again, I think I mentioned before, as one of our kind of the areas where we feel that this kind of blockchain technology will help us to alleviate a bit of that pain of locating the truck and then identifying where they are in terms of the delivery before they reach to the end customer. So I hope that kind of provides a bit of color on what the process is.
Great, thank you, thank you. So Phil, why don't I turn it over to you to talk a little bit about the pain points in the process and why the working group chose this as its test pilot.
Yeah, good morning, everyone, and hope everyone can hear me. And Chris, as you mentioned, I think we looked at a lot of use cases, and I think we focused on dealer floor plan financing and the audit specifically because virtually every retailer, as well as the equipment and truck retailers, have a floor plan arrangement to finance their inventory. So I mean, this is part of the ecosystem. It's really an essential part of the retailer, business, and obviously can help them manage their liquidity and cash flows properly. And as Brian pointed out, it's mandated usually, but every credit facility is usually mandated by the OEM to exist. So just to facilitate the transactions. The reason why I think we chose this is, again, it's prevalent. Two, it's essentially scalable, right? The technology can be applicable, and the administrative savings, the efficiencies, the process improvements can be realized from whether a retailer has 100 units in inventory or several thousand. So it's very, very scalable, and eliminates a lot of the pain points that Mario and Brian focused on. Right. I mean, audits have to be scheduled. They have to be essentially carried out. They have to be, units have to be reconciled. Right. So there's essentially a whole, clearinghouse to reconcile differences. Right. For many valid reasons, a unit may not be where we think the unit is. It could be on different lots. Right. Various dealers, have multiple locations. Especially in the Northeast or in other areas like California or the West, right? There is a lot of space constraints. So units are in many different locations. So the geolocation, and improvements that this technology would provide, I think, and the trust factor would eliminate a lot of that administration. Essentially, really, we have to, for many reasons, we have to close audit points. This takes time and effort. It's costly, as Brian mentioned, and I think, Chris, you highlighted at the beginning that this is, hundreds of millions of dollars are spent each year by the industry, really just facilitating audits, floor plan audits. So I think this was a case. One, it's prevalent in the industry, equipment, auto, truck financing, and it's essentially scalable.
All right, great, thank you. Great overview of the pain points. So we've heard that Jamie from Accenture may be in the participant queue on a phone. So I don't know whether he's able to talk now, but if we do have access, Jamie, are you there?
I am here, Chris. Thank you.
Wonderful. All right, welcome, Jamie. So Jamie, great, just in time. I wanted to get you have such a extensive background working with consortiums in this space, and I think Accenture has done some work on this specific area. So I wanted to get your take on the issue and the if you can talk about some of the work you've done, great. If not, maybe talk a little bit about the way forward.
Yeah, I think, Chris, what everybody has said is 100% correct. This is clearly an area that blockchain technology can address. The ability to have essentially auditable conversations with all of the parties involved automatically will solve most of the problems that we have in this case. So imagine, if you will, you've got a blockchain that has the existence of each of the vehicles. You have each of those vehicles being reported on immediately in real time, where they are, if they're on the lot, if they're not on the lot. having essentially a real-time view of where the vehicle is at all points in all time. And that view is shared not only by the lender, but by the dealership. From our perspective, that solves the problem.
Great, thank you. So perfect. That is a great transition, maybe to sort of maybe some of the more technical aspects of what the group has been doing and hope to take advantage of. So, Josh, let me ask you for your to contribute in your expertise on this. How might blockchain and related technologies help in this specific use case? What is the working group specifically looking at when you get under the hood?
Yeah, so like Jamie was just saying, that having it be a transparent conversation, I like that term quite a bit, that adds a lot to it. One of the features that I think that I'm really especially excited about myself is the addition of zero knowledge proofs in here. And you touched on this a little bit at the top. But for anyone that hasn't heard this term before, zero knowledge proofs, they're a cryptographic method where one party can essentially prove something is true to another party, but they do it without giving up any additional information. So I feel like everyone always uses this example to talk about it. But imagine if you're going to purchase alcohol in the USA, right? I need to prove I'm over 21 to do that. And we do this today by handing over our driver's license or some other form of government ID, right? And there's a lot of information on that ID card that is not relevant to proving I'm over 21. Height, eye color, my name, my address. People in finance especially, alarm bells are probably going off in your head, like that's PII, personal identifiable information, and you're just willingly handing it over. And it's not relevant to proving you're over 21. Even your actual age, the clerk just needs to know I'm over 21. They don't need to know my actual age. And so zero knowledge proofs are a way to allow us to digitally prove that, I'm over 21 without disclosing all of that other information. And so, where am I going with this? If you apply that strategy to, the floor plan financing audit, where does that get us? And Phil was talking on, the point of, geolocation being so important. And if you apply zero knowledge proofs to that, each captive lender, they can get location data from their own vehicles already, and that's excellent. But what if you're floor planning vehicles of other makes? What if you're not a captive finance company, but you want to do floor planning? You don't have access to all that, vehicle location data from the OEM. Zero knowledge proofs are a potential way where an OEM could prove to a lender that, yes, the vehicle is on the lot, or no, it's not. And they don't have to give up any other telematics data, not even the location itself. And that's, potentially very powerful capability that we wouldn't normally have without blockchain. It's something that even, an OEM could potentially monetize if they wanted to with that data, right? Sell zero knowledge proof confirmations.
Great, thanks. I'm really glad you highlighted the zero knowledge proof aspect of it. I think most people know, but OEMs have the telematics data that show location. They've been collecting this for many years. It really began with OnStar, decades ago, and most new cars now come with that capability already there, the vast majority, but it's not used. And I think zero knowledge proofs might be the key to opening that up, right? Because it allows the auto companies to keep the PII behind the firewall, to keep it protected. It's a huge risk if it gets out. It's extremely valuable information, extremely potentially compromising information. And so automakers are loath to do anything with it, even share it with their own subsidiaries. So let me take it to Brian. Brian, maybe you can talk a little bit about that, but before you do, can you talk a little bit about what's changed over the last 5 to 10 years and sort of how we're transitioning to the future and what that future might look like?
Yeah, so let's kind of walk through a typical audit. And the goal with this is for the lender to, with 100% confidence, reconcile. Let's say the dealer has 100 vehicles on floor plan. The goal is to verify where all of those 100 vehicles are. So the auditor shows up at the dealership, they count the vehicles, they find 80 of them. So in this case, they're missing 20. I would say in years past, it was a lot harder to reconcile where all those 20 might be based on what the dealer tells us. It would require phone calls and sometimes physically going to another location to see the vehicle. So in this case, the auditor is missing 20 vehicles. They talk to the office staff, and the office staff says, this vehicle's sold, this vehicle's in transit, this vehicle's at the auction. So some of the data that we've started receiving over the last 5 to 10 years might look like this. And it does vary between, as Josh mentioned, between a captive and a bank. Sometimes the captive has the benefit of OEM data. So like in-transit data comes from the OEM. It's not uncommon for the invoice to hit and the vehicle to show up on the floor plan before the vehicle physically gets there. So we can verify that electronically. We also receive data from the OEM when a vehicle's warranty is activated, which tells us the vehicle has been sold. So if the dealer tells us a vehicle is sold, we can validate through that. We receive sales data from other sources like vehicle registrations, dealer management systems, and in some cases, we've got lenders that are sharing data when a vehicle has been sold, very limited data, just VIN specific. We receive data from auctions. So if a dealer can't sell some used cars, they want to just send them to the auction, we can verify that electronically. We get duplicate VIN data, which can tell us if a vehicle is being financed, whether it's retail or by another floor plan lender in a duplicate situation. And then for GM Financial specifically, also as Josh mentioned, we're working with OnStar over the last few years to leverage their technology. So we can now see GM vehicles that are within a geofenced either dealership sales, service, or storage location. And then we can see vehicles that are not sold. What we can't see for privacy reasons is if the vehicle is outside of that geofence. And even if the vehicle is sold, if it's on the lot, we're not able to see it either because that's now in the hands of a consumer. So, just to recap, seeing vehicles when we do an audit, those are the easy ones. Not seeing is where we really need more automation to simplify the audit process and reduce the need to send auditors to dealerships.
Great.
And if I could add something, Brian, I mean, the other side of that is even though you may have a lot of systems and platforms that are providing a lot of critical information, in many cases, a lot of those systems and platforms are not integrated or not fully integrated. And so you still need to do a lot of manual work, which then creates a lot of potential, let's say, resource, usage of resources and time. So
yeah, absolutely.
Great. Jamie?
Yeah, I mean,
Are you seeing or anticipating any other blockchain related work in securitization, other sectors, real estate, anything that you guys are involved in?
Was that to me or Jamie?
I'm going to send that one to Jamie.
Okay. Yeah.
Looks like he might be having a connection.
Might be
Yeah,
on mute. I think he's on mute, it looks like.
Jamie, if you can hear us, unmute. Otherwise, we'll go to Phil. Phil, you want to talk a little bit about to take it the next step? The floor plan is just the first step in the financing. It goes on. Those loans get sold. They get packaged. They eventually get to retail investors. That process is manual and expensive. You want to talk a little bit about that?
yes, glad to. A lot of these facilities are also, from the lender's perspective, are refinanced. The most common example of that is really what Chris just mentioned, asset-backed securitizations. So because most of these lenders tend to be large in this business, they usually, typically, periodically package these floor plan loans, these credit facilities, where the collateral then where the cars are the collateral, right, into asset-backed securitizations. These are revolving agreements generally, very much like a credit card type of facility, but on a larger scale, hundreds of millions of dollars, if not billions, potentially. And so these transactions, though, are very complex, and they involve a lot of trust services, right? Servicers, banks that act as trust, agents, and they all rely on this key information that the collateral exists or the equipment exists. So potentially downstream, we think that this distributed ledger technology can be effectively, make that process much easier, where securitizations then become much more easily, actually transacted, lowering the cost, and that cost can then be passed on to the, to the retailers. So it's a very good example of an extension of this very use case that we're focused just on the audit of the inventory, but then it can be extended and possibly remove a lot of those trust layers that exist right now, where the distributed ledger, the technology becomes a trust layer, and potentially creating a lot more efficiencies and cost savings.
Great, thanks.
And then, of course, Chris, you mentioned retail securitizations. I mean, that's even a more complex area, but it can be used obviously for retail securitizations as well.
And bigger. Josh, I'm going to throw the technical questions back to you. Any architectural or technical developments that are needed to make additional progress? And so, what are the next steps for the MOBI and the working group?
Yes, so I think that the tech, it's largely here already. I think the next steps for us is really improving that it works and it's bringing value to the table. And that's, hopefully what the pilot phase will teach us. From there, it goes, towards that production look, and, you're gonna have to create some cooperative blockchain network that you would use. And this can be a pretty tricky step to align multiple different companies, especially if they're competitors, as many of us on this call are. And if you look around at, past business, blockchain networks that we've seen, around the various industries, if one company tries to, own the network and then pitch it to others, that's usually not a recipe for success, or it's, a recipe for limited growth. And that's because, no one really wants to join someone else's network that they own. There has to be, kind of a spirit of co-ownership, I guess you might say, to these networks. And they need to be a neutral ground, or they really won't establish the, that famous network effect, that really sees things kind of take off and grow on their own. And I mean, I think that's, why everyone's on this call, has been interested in MOBI, their role as an independent actor in, creating these kinds of networks can be really beneficial. As an example, if anyone's not aware on this call, MOBI is actually in the process of jump-starting a network called the Integrated Trust Network, or ITN. And something like that could be a good platform for competitors to, actually come together in the automotive space and work together.
Great, thanks for mentioning the ITN. It will play a role, we think, in the first demonstration of this. Mario, I want to turn things to the future a little bit, and I want to do that by asking you about forklift telematics and the sort of the relationships between value and finance, and the calculation of residuals, and what might be going on the factory floor, because this, as I said earlier, this technology of linking identity and location, right, has many applications, and sort of automating logistics is one of them. Any thoughts on that?
Sure. I think, like we talk about telematics, that's going to be, it is important already, material handling equipment, not only for tracking the equipment, hours of utilizations and downtime. That's kind of the beauty of having that information available not only to the lender, obviously, or the dealer, but the customer himself, for fleet management. But if you think about from a lending perspective, especially on the leasing product, we need information for accurate calculating the residual value of the asset, estimating the number of hours of utilization of the equipment in order to calculate the overall lifetime, expectancy on that truck, and as well the help us to identify what the correct pricing should be on the product. And other part of information that telematic can provide is also the conditions with the forklift will be operated, whether this is an asset will be inside a warehouse or outdoor in an open yard. Some assets could be utilized in a construction or a foundry. So there are different factors that affects the residual value of the asset. So telematics, it can enhance that visibility of, not only identifying the hours utilization, the downtime of the asset, but also geolocation combined will help us as well to do better fine tuning of our residuals and calculation. That's for everyone in lending is key for properly calculating not only the residual value of the asset, but as well the price of the contract. And that information as well, we identify as part of the journey of the equipment in the life cycle. And we see that the potential use in blockchain also open up a lot more of analytics and help as well our OEM for better understanding of how the assets are used, the configuration. There's another key element in our financing, which is very important for securitization purposes, is the industry code. So in a B2B business and commercial financing, it's very important we sustain a diversified portfolio from a lending perspective, but also our customer may belong to a specific industry, right? So the industry code yield a lot of information, not only geolocation, but line of business, utilization of the equipment, hours of utilization, and all of that together, it give you a huge lift on your asset analytics from lending and from a manufacturing perspective. So I think is kind of like an almost endless opportunity, the use of telematics.
Great, thanks. So a few years ago, I'm sure everybody will remember that virtually every CEO of every auto company came out and said, we're not a manufacturer now, we are a mobility services business. And so I wanted to ask the OEM reps on the call here, are there any pay-as-you-go service pilots that you could talk about, blockchain or not? The things that combine this location and identity.
Well, on the GM side, we piloted with Cadillac a program in a couple of major cities like New York and San Francisco. The shared vehicle concept, but didn't really take off. So there's nothing, to my knowledge, going on right now.
Chris, I think that although there may not be specific initiatives really being implemented, I mean the whole charging infrastructure for EVs, for example, that could actually be a very good practical use of this technology. Anyone that's been in the Northeast knows that, for example, just knowing just going over some of the bridges and tolls, that could be anywhere from $15 to $20. And you eliminate a lot of the tolls potentially if geolocation can be used, so you can charge based on the usage formula. So there are a lot of practical usage of this technology. It just needs to be effectively developed, and that's what MOBI is doing, right, or help doing. And I think this use case can actually maybe leapfrog the technology into other areas like what I just mentioned. And I'm sure I'm not the most creative person. I'm sure other folks are thinking more about what other usages we could apply here.
Yeah, I think payments from the vehicle. I think everyone has investigated that as a potential big growth area by all the vehicle OEMs. But one of the difficulties there is in knowing who is driving the vehicle and authorizing these transactions, and also how could a vehicle identify itself and communicate and potentially do automated transactions. Outside of the finance working group, MOBI has developed some standards around vehicle identity using verifiable credentials. And verifiable credentials are essentially little data objects cryptographically signed by an OEM. You can kind of think of them like a vehicle birth certificate that the vehicle can carry around with itself. And I think the reason that's exciting is because it can allow the vehicle to identify itself, to other connected devices, maybe other vehicles, parking structures, smart city devices, bring money into this equation. And you can foresee a world where machines, are making auto payments to other machines. And then the use cases really start to explode at that point, automated parking garages.
That's really the opportunity, isn't it?
Yeah, for sure. Some of the things you could do with it, automated parking garages, pay as you go, maybe road usage or infrastructure tax. Imagine like a world of autonomous vehicles and you're late for a meeting and there's, a button on your vehicle that says, I'm in a hurry, and you push it and it, maybe pays small amounts of money to other vehicles for them to get out of your way.
Absolutely. Totally agree.
Yeah. Yeah, and on the flip side, so that's like the vehicle identity, but even you can use the same kind of self-sovereign identity strategy for person identities too. And some governments are already experimenting with this. I know Alberta, Canada, for instance, is one that issues digital copies of your driver's license in the form of a verifiable credential if you want it. And that opens cases too, where you can start paying from the car and, authorized transactions, from your in-vehicle display, something like that.
I couldn't agree more. That is the future from what we see.
Jamie, why don't you share a little bit more of the vision, the new economy of movement? I know you were involved in some insurance projects. Anything that you can talk about in terms of what Accenture is doing or thinking about or advising its clients?
No, I mean, I think what was just said is 100% accurate. The connected car is our future. And a car that can buy a parking space, that can buy additional horsepower, that can buy a heated seat at demand, as opposed to having it purchased ahead of time, is the future. So from our perspective, and what we're working with some of our clients right now, is exactly that. How do you enable all of the functions and features of the car on demand?
Yeah. So I have a little phrase that I love because it kind of sums up this whole theme, which is IoT turns products into services. It makes everything an on-demand service. So I think that's great. I'd like to give everybody a minute or so to put their Jetsons hat on and sort of talk about the future. You guys have been talking about some of the use of the data, the on-demand services in the car, the pay-as-you-go. There's another side of it that might be worth talking about, which is the ability of the car to sell services, right? The autonomous car can be a business. It can sell data about its real-time data about location for updating maps or weather or things like that. Put on your Jetsons hats. Anybody want to throw something out there? Where is this going?
I don't know if it would go this direction or not, but we talk about how valuable all that connected vehicle data is, and how do you ask for that from a customer, and they agree to share it with you or they don't. What if we were to essentially pay a customer for some of that data, and get them involved because it's their data. If we're able to monetize it, we could potentially share that monetization with our customer as well and pass some of that back. And connected vehicle data, it spans just every aspect of it. You touched on some of it, but so much of that can just go into improving your products. Even how many times does a lift gate open and close over its lifetime? That is potentially really important data for an engineering group, because they're able to optimize that part to open and close enough time so that it doesn't break down over the course of its life, or vice versa. Maybe we've over-engineered it, and that's a area that we can save some money on, because it doesn't need to be opened a million times in its lifetime. Our data shows it's only being used maybe 500 times on a vehicle. So things like that.
So in the similar line, for material handling business, especially on Toyota Industries, we spend a lot of effort in designing and building AGVs, automated guided vehicles, and they are used in factories in a lot of these kind of similar to the autonomous vehicles for the on the auto side. And if you think about like, you know, utilizing the data that is stored in the AGV to create an ecosystem of best warehousing practice for not only the OEMs or the manufacturer, but as well for the user. So not everybody would use AGV in the same way, but you know, creates a lot of information analytics that can be shared properly, you know, among similar line of business, and it creates kind of like it helps to design better products in the future, and also to be able to, and that monetizing side of the thing is like you're actually paying for what you're using out of the vehicle, and not necessarily when the vehicle is just standing on the corner waiting to get charged. So in the business side, in commercial side, is huge. You know, data is everything, pretty much. And I think just thinking about like what this decentralized ledger bring into the picture is it has a tremendous benefit for the warehousing industry.
Okay, maybe it's a good time to turn to questions from the participants.
And if anyone has any questions, please just go into the chat, you know, or if you would like to speak as well, just whichever is easier. The first question though is really around the technology of the pilot, you know, so where do we stand now with it? And what are the next steps? So let's just start with that and then we'll go to the next part of that question.
Yeah, I could maybe.
Josh, yeah.
Yeah, I can maybe take a stab at this, and maybe Chris, you want to add on some things at the end. So, state of the technology, you know, obviously that blockchain network's a big part of it, and you know, we'd be looking to highlight, you know, what's been accomplished with that ITN that we talked about earlier. You know, that's currently in a test network state, and then you know, a lot of the very application-specific pieces, you know, those are being built right now by MOBI. You know, to enable, you know, things like zero knowledge proofs and, you know, a user interface for dealers and, you know, lenders to log into and, you know, manage their inventory, that kind of thing.
Yeah, I think that there's you know, MOBI is in the FSC is doing one pilot as part of the drives program. There are also members of MOBI who are working with MOBI and the MOBI standards and the integrated trust network that that Josh mentioned, and another infrastructure platform that we've developed called Citopia to realize this. Some of that is under NDA, so I don't think the members can talk about it today. But there are a couple of efforts going on to bring this technology from the lab, from the standards to commercial scale, and they're working with a large and very forward-looking state DOT.
And with the pilot, with the floor plan audit, I mean, Brian, do you want to talk about how we brought in TrueSpot and what the state of that is as well?
I mean, one of the goals is to kind of prove out this pilot is to receive data electronically, and whether that's in embedded telematics that, you know, like a OnStar, for example, or some type of device that's basically placed in the vehicle that can tell us electronically the location of that vehicle, which is for the pilot, the direction we're going as a start. But ultimately, I think the best source is the connected vehicle that each OEM is, whether they're there today or they're definitely heading in that direction, to leverage that technology, at least for this project. And then you see the question here from Don coming in. That's like the second part of it, to fill in the gaps of, as I said, the vehicles that are on the lot are the ones that are easy. It's the ones that we can't see that are hard. So I think that closes the gap if we're able to do.
Have to be done by with your OEM. Another question: does it require the support from the OEM, or can it be done by a third party?
I think it could be done by a third party as long as you're not having to move devices around. So whoever can gather all of that data from the connected vehicle, whether that's coming directly from the OEM to the finance company or to some, consortium, ultimately we need all vehicles, all OEMs providing this data.
Yeah, it's maybe sort of one of the reasons why standards are important. We all know that someday, this is going to be provided from probably a vehicle, hardware secure wallet that manages vehicle identity and keys, and perhaps even can make payments. But there are no standards for that today. MOBI is developing the standards, and some of those standards are now being implemented in these pilots. Back to Sunil's question, sort of what is the state of the technology in the one of the pilots that we're doing? We're going to be doing a installed device in the car. I think Brian, you mentioned TrueSpot. We're working with TrueSpot on that. For the pilot, it's a bit of an intermediate step because ultimately we want it coming from the vehicle telematics under the zero knowledge proof. Josh talked about that, and one of the other pilots that's being done actually does that.
Great. Can we elaborate also on Don's question? So Don was talking about all the a lot of information is being gathered, right? And it indicates the status of the vehicles physically, right? Verified to be in the inventory. It's useful, but it requires validation. So verification and validation, two big words in our auto finance arena for sure, for multiple reasons. And this takes resources. So what has to happen to make this information part of the vehicle's identity? For example, title and registration data, auction sales data to confirm a sold date. So what has to happen with this information?
Well, maybe I can step in. At a minimum, Dawn's question, I think, spurs a lot of ideas about, things that can actually trigger a transaction, a monetary transaction. So if we have data, verifiable data that the car has been sold, and it could, the technology could enable us to essentially trigger a monetary payment, right, between the parties. So, I mean, at a minimum, that's something that we will probably investigate and do with this pilot, or extend the pilot to think about that. But I think just maybe I'll get into some behavioral. If the other, if the retailers know that we've got data that verifies a sale, they obviously can be more motivated to say, I need to initiate the transaction myself. So old technology where someone then is actually moving money around, as opposed to a smart contract where that event actually, the information triggers the monetary transaction. So I think this is where the technology will eventually lead us to, is the smart contract, and that being embedded in the technology. And I think Josh and Chris can talk more about that than I can, but that's essentially what I see as and I think Dawn's question spurs that thought that, it may actually motivate our retailers to make sure that they're paying the cars when they're paying for the cars when they're sold.
Yeah, even looking beyond the floor plan, audit process, smart contracts and, what they can bring. So one of the things that's, really taken off in the last few years with public blockchains is decentralized finance, or, DeFi as it's called. And there's collateralized lending through there. It's all automated. As soon as, the collateral doesn't cover it, you liquidate it and make the lenders whole, right? How do you apply that to the auto lending process? And as more and more things move to be, on blockchains, smart contracts have more and more control over what they can, access. So if vehicle ownership, one day moves to a blockchain, now you can do things automated through smart contracts to handle vehicle ownership, or, you get into like credit scores and that kind of thing, moving to the blockchain. It gets into a world, now where maybe you can do lending, through DeFi for automotives or automobiles, right? So yeah, exciting growth area.
Maybe I can, we talked a little bit about the hardware, the device in the vehicle versus the vehicle telematics. We didn't talk about sort of the software side of things, the software stack, and the state of the technology and the demos there. Josh alluded to it earlier when he mentioned verified credentials, VCs. The approach that MOBI is taking is to anchor the identity of a vehicle on a chain, but keep all PII and really any other competitive information or private information off chain and handle it with verified credentials. We're basically following the approach of the W3 consortium. That's Tim Berners-Lee's W3C. And they've come up with a lot of specifications about digital identities and VCs and VC presentations that we've largely adopted in the ITN, which is the basically the DID registry and identity management part of it, and Citopia, which is the verified credentials and digital twin and services management part of it. We've kept those two separate because we don't want to combine identity with platform. We think that creates sort of a choke point and the tendency to centralization and monopoly in tech. And so to keep a level playing field, to keep things separate, to keep the market power of the platform reasonable, allow people to switch, prevent lock-in. We've separated those. So that's the basic software stack and the approach that we're taking. So all of this stuff that might come out of the telematics would be handled presumably in verified credentials owned by the originator. And that might be the auto company, right? It might be the driver, it might be the dealer, it might be the part maker, the battery maker, for example. But all of those bits of information can come together in VCs to be used by the community under terms that are agreed by the parties via smart contracts. So I'll just say one other thing, interesting historical note, smart contracts actually predate Bitcoin by about more than 10 years. And one of the two instances in the smart contract white paper, was auto finance, was auto leasing, and sort of turning off the car if the leasee doesn't comply with the terms. So just an interesting historical footnote. Any other questions?
There were no other questions, so let's just go real quick. We have only a couple minutes, so if we were to go around the table and you guys have one sentence piece of advice to all this group, how's that? Where do we want to start? Jamie, you want to start with you? I don't know if he still is able to. Maybe he's okay. How about Phil? What would you say?
Well, I would say that really this pilot will demonstrate that with better accuracy, transparency, and process efficiencies, we will eventually, move quickly to a more digital transformation of this industry, equipment financing, retailer financing. So I believe that it's vital and it will happen. I'm very confident in that, and I'm very excited about it.
Great. Mario?
Yeah, similar. I think that's it's just the tip of the iceberg. Really, we're seeing a lot of other potential opportunities of using blockchain, and especially in financing and lending, is going to be huge. I agree with the group, and I think there's also an opportunity to bring more transparency to the process, as well as more are adopting this technology in more complex business scenarios. I think that everybody's going to start jumping very quickly into blockchain.
Wonderful. Brian?
Yeah, I mean, specific to the inventory audit, we've been talking about changing what it looks like. You saw in both my, kind of current state and future state, not a lot has changed. We're still going out and sending physical people to do these audits, and my goal would be to change that, move the needle.
Josh?
One piece of advice, I guess I'd say research and explore. Around 2006-ish or so, there was this big move away from brick and mortar banks, to online banking, and a lot of people equated that to, cutting away the fat, getting it down to the muscle, and I think we're getting to a phase where that's going to happen again. So much of the, financial process is going to become more and more automated, and blockchain technology, I hope is right at the center of making that happen.
All right, I like that. Jamie, are you able to come on? You can see Jamie's here, but I don't know, you're on mute if you can. Well, I'm not sure if you will be able to. So Chris, thank you. First of all, thank you to everyone here on the team. And Chris, do you want to add any last word?
Oh, just real quick. I just am really excited because this combining identity and location is, that we're demonstrating here really is opening up a multi-trillion-dollar, new economy of movement ecosystem, pay-as-you-go ecosystem, and we have a number of pilots demonstrating various aspects of that on our website. People can come and look at. So thanks everybody. Great sharing this project.
Thank you, everybody. Have a great day.
Thank you. Take care.
Thank you, everyone.